Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 20th of July. Today, the spotlight will be on the ECB policy decision. Given that no change in policy is expected, market focus will probably be on whether the bank will remove from its forward guidance the sentence that the QE program can be expanded in terms of size and/or duration if necessary. Such a removal would likely set the stage for a formal announcement in September that QE tapering may begin by the turn of the year. We see three scenarios that can play out. In the hawkish one, the bank removes that sentence altogether, heightening speculation that a tapering announcement may be looming and consequently sending the euro higher. Eurodollar slid yesterday and is currently trading near the support of 114.85. But the price structure still suggests a short-term uptrend. In this scenario, the pair could rebound from near 114.85 and perhaps challenge once again Tuesday's high of 115.85. In the less hawkish scenario, the ECB may decide to remove only the signal that the QE program can be expanded in terms of size, but keep the bias that it can be extended, thereby allowing itself some room for maneuvering. Even though this would still be a hawkish shift, the euro's reaction may be negative. Investors looking for a complete removal of the QE bias may be left disappointed and perhaps lock some profits on their prior euro long positions. Eurodollar could continue its slide and perhaps break below the 114.85 line, aiming for the upside support line drawn from the low of the 23rd of June or our next support of 114.35. Finally, in the dovish case, policymakers decide to be patient and wait for the September meeting to make any further changes in their bias. This could lead to a significant downside in euro as investors push back their expectations regarding the timing of QE tapering. Something like that may cause euro-dollar to collapse and bring a short-term trend reversal. Having said that, though, we don't expect this to lead to a reversal in longer-term horizons. We would treat a possible near-term reversal as a corrective phase of the longer-term upside path, as we expect the ECB to continue shifting its language to more hawkish at its upcoming meetings. We believe that the second scenario is the most likely. We think that the bank will remove only half of its bias on fears that a complete removal could be overinterpreted by markets and lead to unwarranted movements in financial conditions, which could put the prospects of a sustained adjustment of inflation at risk, a concern mentioned in the minutes from the June meeting. Finally, there is also a risk that President Draghi points out the bank's displeasure about the recent euro appreciation, further amplifying the case for a euro pullback. Now moving to Japan. Overnight, the Bank of Japan kept its ultra-loose monetary policy framework unchanged, as was widely anticipated. Policymakers acknowledged that the recent moves in CPI have been relatively weak and downgraded their inflation forecasts for the next 3 years. Meanwhile, they raised their real GDP growth forecasts for 2017 and 2018. The reaction in the yen was negative, albeit small. Importantly, the bank provided no hints that it could alter its QQE with a yield curve control framework anytime soon. As such, we maintain our broader view that the yen may continue to underperform the euro, the Canadian dollar, and the Australian dollar, given that the ECB, the Bank of Canada, and the RBA have turned optimistic. Now, as for today's economic indicators, in the UK, retail sales for June are due out and expectations are for a rebound following a sharp decline in May. Sterling yen traded lower yesterday but hit the key support of 145.35, and during the Asian morning today, it rebounded on the Bank of Japan decision. If indeed UK retail sales rebound today, the pair could extend its overnight recovery and may challenge the 146.35 resistance. A break above that level is possible to see scope for extensions towards our next resistance of 147.30. However, we would stay mindful on larger bullish extensions. On the daily chart, we see that the rate has been trading in a sideways manner since the 17th of November, with the upper bound being the 148 territory. We would like to see a clear break above that territory before we get confident that a long-term uptrend is forming. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.